Thank you, everyone. If we can reconvene. A number of jokes over the IASB research forum about academics, having to bring their classes to order. I know what they were talking about now. So, yes, we're already a few minutes behind schedule. Those of you who know Kathleen, you don't want to be off schedule. So, work with me, please. So thanks for coming back. I hope you all agree with me. It's been a really productive day, very informative day so far, and the afternoon proves to be in the same vein. So now we've got a session which is essentially a meet the IASB session and opportunity to pick the brains of some prominent IASB members. We have the privilege of two people here that will be well known to a lot of you in the room, if not all. First of all, immediately to my right, Linda Mezenhutter, who's the current Deputy Chair of the IASB. I won't go through her entire bio, but let's just say it's an extensive CV with respect to standard setting. Just checking. So having joined the IASB in 2022, prior to that, an extensive career on the Canadian Accounting Standards Board, so which included a term as chair as well of that. So, like I say, very extensive. And then to Linda's right is our own Professor Antaka, who is currently a member of the IASB and has been since 2017, was reappointed in 2022, finishing up your maximum term in the middle of next year, is it not?
Up an 8-year term in June 2025.
Yeah, so mid next year. So coming up to the maximum term. A greater career highlight was working on the AASB. So
a stepping stone.
Yeah. So, and prior to that, professor at the University of Western Australia. So, Anne is a very close link that the AASB has with the IASB, which has always been appreciated and has enabled us to be working very closely with our international counterparts. Also, with Anne's academic background, has a very strong bent towards supporting research and supporting the AASB in its efforts in this endeavour. So with that, I'll now come over to the panel. Make sure this microphone's working. Am I speaking? Yep, that should be good enough. I can hear me at least. So as per all the other sessions, any questions you've got, please use the QR code that will come through to the trusty tablet here, which I'll be able to ask, but I'll kick things off while you all think of what questions you want to hit Linda and Anne with. So to both of you, what has been the most challenging project or decision that you've encountered during your time serving on the IASB?
That's a pretty interesting question. Sometimes the most challenging questions are the ones you don't get to answer. So a lot depends on what our marvelous staff brings to us as options, that sort of thing. We've had many discussions at the board table. I'm going to mention one in particular, Anne, on the equity method, because we've had the age-old discussion, is it a one-line consolidation or, otherwise? And we didn't get to answer that question. Another question we didn't get to answer is, which is better, impairment only or amortization? Because we weren't starting over from the beginning. We had to kind of say, do we have enough justification for making a change to the current point of view? So for me, those were a couple of challenging discussions.
The decisions on the big project IFRS 18 as we went along, because the feedback was great and people would say, oh, okay, management defined performance measures, let's have free cash flow, let's have this, let's have that. And to be able to cut that off, you know, they were valid requests, but to say, no, we can't do that. The decisions around the disaggregation of by function into the by nature items, and having to really just slowly, carefully walk through all that feedback to try and make the decision that was reasonable for all the participants. I think the other thing that's hard is taking the projects off. IFRS 6, we spent a lot of time working on that and working on how we would improve reduce diversity and policy choice and improve disclosures. But that was taken off. Standard setters like us, like ourselves, have to be so aware of resources and be really focused on how we spend our time. So sometimes projects, even though they're valid and we've done so much work on them, they come off. So they're hard decisions.
Well, thank you for that. Now, maybe to a more specific topic on the current agenda. With respect to uncertainties regarding climate risks. Don't pretend you didn't see this coming.
Not pretending.
So we've had, since the IASB has been formed in a separate board, there's the concern regarding whether there should be a delineation, if there's a delineation between sustainability and financial reporting. And of course, there's the connectivity consideration. But the IASB has recently sent out its exposure draft regarding uncertainties regarding disclosures of climate risks. So why is the IASB taking action at this time? And would this be more appropriately dealt with by the IASB?
It's a fair question. So let's think about where the item originally came from, first of all, which was in the third agenda consultation. Users were very loud and clear that they were reading about, at this point, climate risks in other, the narrative section of the annual report or in other materials, but they weren't seeing any impact in the actual financial statements. So that's where the project originated, is from the third agenda consultation, which, by the way, predates the formation of the ISSB. So that's one fact. So fast forward, our focus on this project is within the boundaries of the financial statements. Okay, so less forward-looking about the notion of, is there an impact from climate risk, and now we've generalized it to other risks, other uncertainties, but is there a financial impact within the financial statements? And if you think about it, there is an overlap. If you think about the notion of this as S1 and S2 about the current financial effects, there is an overlap between what the ISSB talks about in terms of their disclosures and the fact that we're identifying what's within the boundaries of the financial statements. But we're also focused on our own literature. So the existing guidance around uncertainties, disclosures about uncertainties, about defining what material information is about these risks within the boundaries of the financial statements currently exists in IAS1 and other standards. And so we're focused on those standards. And if you look at the examples, we are very much focused on that literature. And our view on that is at this point, is we're trying to do this with examples rather than additional standard setting, because as we read the existing requirements, we think those are fine. But we think we're trying to now display to people, this is how we think you should be meeting these requirements, and that's why we're doing the examples.
May
Yes,
I?
please.
At our research forum that we had at the University of Sydney Monday and Tuesday, we had the chance to do a case study on the examples. So the people attending, 50% practitioners, 50% academics, we had breakout groups. And when people reported back, on balance, they could see the purpose, they could see why we were doing this, and we got a lot of support from people for taking this path for the reasons that Linda's saying. There were suggestions in the room of how to improve and different things we can do, and we appreciate that sort of feedback. But a lot of people can, I think on balance, the feedback was very supportive, because a lot of people can see that we're in flux, and we're in an area that things are moving at the moment, and going the illustrative examples way should be helpful. Yeah, thank you.
All right, thank you both. Couple of questions from the audience now. Defining connectivity as a challenge for the future. When did connectivity arise as an issue or a goal at the IASB?
Well, it was there when I got there. So I spend a lot of time talking about this word. The fact is rightly or wrongly, the organization, the foundation, chose to use this word to describe how the two boards need to work together. So it's within that context that we use the word connectivity. Because when you become aware of something, you notice it now where you see it everywhere. And so I'm seeing this word used more and more in terms of different ways of using it. But in our parlance, we define connectivity as the way the IASB and the way the ISSB work together. And so we define it as we're doing a project, we think about the end result of that project. In particular, are we going to use kind of the same concepts? So I mentioned materiality. If you look at our literature, we have a practice statement on materiality. The ISSB has embedded the same definition and concept of materiality in their literature. In fact, they're doing another piece of work now where they're going to put out more information on materiality, about how do you assess materiality within the context of your sustainability related financial disclosures. So we have our projects, we have the products, the end products we are going to issue, our literature. We have our teams and our processes where we work together, we share information. So for instance, on the exposure draft that we just mentioned, the climate-related and other uncertainties, we had ISSB staff working with our staff to make sure that we were consistent with the way they were using the same words. And we had one of the ISSB members, Jeff Hales, sit with our board advisors as they were reviewing the early drafts of the examples. So we worked very closely with the ISSB on that. And that's how we define connectivity. Anne, you want anything to that?
No, I don't need to add. Thanks, Linda.
I'm reading this one out.
Okay.
Where does it stop? Will there ever, in your view, be a point where there are enough standards?
Well, hey, one of the things that Keith didn't say was that for most of my career, I was a preparer, okay? I was in the banking industry before I became a full-time standard setter. Before that, I was in high tech. And so I understand how lovely it is when the standard setter comes along and says, here you go, now you're changing this. I get it. So let's think about where we've been. For a while, there was the stage when the ISB was first formed where there were gaps in our literature. So we needed to write standards because we didn't have a standard. In fact, we're still working on one of those. It's called rate regulated. So you have to fill out the suite of standards because certain things arise. And then there's the notion of maintaining the standards for new developments. And so we do that. There's also things we did because it made sense in terms of updating revenue, and that's substantially converged with the US GAAP standard. Leases was a big project. Finally, getting a comprehensive insurance standard instead of having all the jurisdictions around the world having slightly different or very different practices for recording insurance contracts, because they were largely IFRS 4 grandfathered their local jurisdictional regulatory practices. So there were very different treatments for insurance. So what the IASB has been focused on, and it came through the first, second, and third agenda consultations, is building out and fixing and updating. Now, we've had several conversations around the fact that pretty soon we're going to be in the business of maintaining. But even that's pretty interesting if you think about it, because we got earlier in this year, we got a big request, and they said it was urgent, urgent, urgent on power purchase agreements. So we're pumping that through. We're updating the own use guidance that was taken from IAS 39, lives in IFRS 9. We're looking at hedge accounting application to help with the volatility there. But then at the same time, pollutant pricing mechanisms. People want something on pollutant pricing mechanisms. So to be fair, a lot of what we get is ask, could you just look at this issue and fix it? So yes, I think we have a pretty full suite of literature, but the reality is we continue to get demands. And just as an example of that, in the third agenda consultation, as people wrote in comment letters, there were requests for 70 different projects. 3 were added. So that means there's 67 that could come back in the next agenda consultation. I don't know. So let's suffice it to say is a lot of times we do projects because people ask us to do projects.
And there's also scope where people ask us to make better what we're doing. So the organisation in this form has been 20 years, and we have evolved over that time, and we've learned, and we're changing things as we go. But there's old things, and people say, can you please have a look at this? If we step back and look at the bigger picture, can we do it without accounting standards? I mean, initially the idea of accounting standards was to avoid individual contracts between the providers of capital and the users of capital. But the accounting standards give structure, and we know that in the capital markets, the demand for information is huge. It's not just accounting information, it's other information. But the structure that comes from following accounting standards is the structure that a lot of the other information is built on. So we know that the capital markets have got great demands for comparable information, for transparency of the information. And we don't hear any pulling back on those demands around information quality and the world's evolving. Why have we got the big intangibles project? Because people say that the information on intangibles, there's scope to improve that information. And indeed, people tell us it's really, really important. So we're not out of business yet.
On that note, I might just ask a question about intangibles. So that's been described as a large project. For this project, how does the IASB decide which matters to tackle and when?
Go ahead.
The IASB consults a lot. And so Linda's mentioned agenda consultation. We're halfway through this cycle, so in 2.5 years' time, we'll go back again for agenda consultation. The bottom line is that we can never make all people happy all of the time, and we work hard to try and make some people satisfied with what's coming out. And look at the discipline to come up with sort of 2.5 project out of last agenda consultation where there were 70 issues. We do post-implementation reviews and people say, this needs attention, this needs attention, this needs attention. And so we have to exercise a lot of discipline around that. So how do things get on the agenda? In the 2 ways that Linda and I have already mentioned, through agenda consultation, a very broad process that everyone can participate in, and through these issues that are raised to us through our interactions with stakeholders and our horizon scanning. But all of it gets a cost-benefit consideration, and that means examining what the problem is, and does the problem have any potential solution that we can see, and what are the cost benefits around what it is we're trying to achieve with the standard, and how would it work if we actually took on a standard setting process. So we actually do research first and evaluate this before we move into standard setting. So I think that's a little bit on how we choose and how we proceed. Yep.
I think with regard to intangibles, it is a very large project and it's a moving project. I mean, Crypto has been asked for, other specific intangibles have been asked for, and by the time we get this scoped, there's going to be like 5 new things that are being targeted. And so as we go out throughout the duration of this project, I would expect we're going to have to keep our eyes on the horizon and see what's coming our way. The staff has initially said there's a couple of ways, and they're pretty obvious. One is you do one great big project. Guess how long that's going to take? Okay. And the other is you do it in phases. And the risk of doing it in phases is you make decisions in the first or second phase, and you get to phase 3 or 4 and decide maybe you should have rethought something that was in 1 or 2. And we all know how everybody loves making changes twice. It's bad enough to make them once, but nobody wants to make them twice. So that's something we're going to have to consider. We don't have an answer right now, but the staff is looking at the options, and where they're going to come back, and I'm sure we're going to have a couple more discussions on that in terms of how we phase the project if we choose to do it that way.
This one's maybe more focused on for Anne, given greater length of time on the IASB. So, Anne, how has the IASB changed in the 8 years that you've been there, operationally and the people?
Yeah, so it has changed operationally. The trustees consulted widely and created the second board, the ISSB that we've been talking about today. So operationally it has changed, and we now are a multi-location organisation, which brings all sorts of benefits and challenges. We've also always tried to reach out into stakeholder groups, and board members and staff are very busy consulting, and now we can have hybrid consultations as well as in person. So while the organisation has changed enormously in its profile and its locations, the work that I do hasn't changed, and the focus on reaching out to stakeholders and being connected, that part doesn't change. And the other second part of the question was 2 bits too. You can't see it.
It's disappeared now.
It's disappeared. Well,
operationally and the people.
People.
How have the people changed?
They were good then and they're good now.
So they haven't.
So can I just add something to that, though? I mean, yes, I agree with everything that Anna said. I've been around 2 years, and I can tell you we have changed in the 2 years. And I'm talking about the IASB. If you look at what we've accomplished this year, by the end of this year, we will have completed 7 projects. Look right now, we've got 5 documents out for comments that are due by the end of this month. So one of the things I've been focused on, because I was asked when I was appointed vice chair, was to look at the way we manage the projects. And one of my big beliefs, because I was the chair in Canada for 9 years, is that if you bring a project back to the board in subsequent months so that the board remembers what it's talked about last month, and you then build on that this month, and then you build on this the next month, that you get more traction, you get a better pace going. So I've worked with the various project teams to really focus on our process. And that the reason we wanted to do that is we wanted to get some projects done so that as new things come up, we have capacity to consider them. They're not all going to be big projects, but we want to be able to look at these things that other people are asking us to look at. So I would say even in the 2+ years I've been there, we've changed.
When do you think standards will be simplified?
When transactions get simpler. Standard answer. And I lived and breathed that. I was in the banking industry, and as soon as I got the accounting for one structured transaction figured out, some crazy guy in capital markets would say, take that transaction and change this, this, and this. Now what's the accounting? And these were very complex transactions. So there are ways we can make the standards easier to understand. There are ways to, and we're focused on this very much. When we write something now, we're trying to think about that in another way where, for instance, one of the discussions I was having earlier today is around the ease of understanding our documents when you read them. And a good test for that is, can you actually translate what you've just written into multiple other languages? And so the staff is very focused on how they write things, and are they going to, is it very understandable in terms of that? But there will always be this notion of complexity because of the complex transactions that companies do. And the fact is, when you write a principle, it won't exactly apply to that fact pattern, and that fact pattern. So you're writing a principle. And so by its very nature, depending on how complex the transaction is, figuring out how to apply these principles, and do I need to actually look at multiple standards to fully understand how to do this transaction? I don't think that complexity will go away. That's my personal view.
Thank you. Given that accounting exists to measure the economic effects of business activities, do you think there's a rationale for economics to be in the discussion? For example, defining assets and the role of property rights for control.
I can see Anne wants to take that one.
We often have discussions about capturing economic reality. People want the financial reports to represent the economics. So it's not that we're in some world where we only think about accounting. We often talk about the legal structures around enforcement. We talk about the work of the auditors, talk about the various stakeholders. We talk about information consumption. So I think we're looking at it broadly. I don't think we look at it narrowly, and I think we do discuss the economics of business and the extent to which our proposed solutions, which would lead to new information, reflect the underlying economics.
Okay. A few minutes left, so maybe I'll ask another simple question.
Oh, good.
On the equity method, why has the IASB taken the approach of finding principles in IAS 28? Does this approach just mean further amendments are patched into IAS 28?
Now, you were there when this got going. Do you want to take a stab at it and I'll add?
Yeah. Well, through the agenda consultation Linda
Yep.
mentioned, it was brought up as a project. We put it on the list and said we'll do the post-implementation review of 10, 11 and 12 first, and then consider whether we'd start this project. To go back to the basics and decide whether we're looking at a one-line consolidation or a measurement method, we didn't get a lot of support for that, so that is not the way we went. Linda mentioned that we get a lot of queries about how to use our standards and how they're working in practice, so implementation queries. We have quite a list on the equity method that we've gathered over the years. So that was the way we approached the project. Go back and have a look. Can we find principles in there, and can we use those principles to answer these application questions? So took that approach. It's out for comment now. We're interested in your comments. Some people, if you are a theoretical person or a purist, you might say the standards, when you change them, you've got to rewrite them. You've got to go back and bring them up to the current language and look at the whole thing. But often we can't do that because of the resource that's involved and the implications for stakeholders. If we start changing words, the stakeholders say, have you changed the meaning of something? So there's a lot of work involved. However, for this one, we're doing what I just said about trying to determine principles and then use the principles to on the application issues. But we are also trying to improve the understandability of what is quite old standard. So we're open for comments on that. Linda said that part of the way we work is to be continually considering how to make the information, the requirements in standards more accessible to people, more understandable. And so as we've written the proposals in IAS 28, you can see that we've done some restructuring and we're keen to see if people think that helps.
All right. Thank you. Linda, you didn't want to add anything to that?
I think she handled it well. Don't you think she handled it well? I did.
All right.
Yeah.
On that note, I think it'll be a good spot to finish this very interesting panel. So if you could all thank Linda and Anne with me in the usual way. Thank you both. Oh, okay.
I get it.
You stay up here. Yeah, well done. Okay, so introducing our next topic. It's our final research paper, and I'll be 20 years of IFRS in Australia, reflections and forecasts research presentation. I'll call Professor Stephen Taylor from the University of Technology, Sydney, coming up here. He's wearing his professor at UTS hat today, but by way of introduction, Stephen also moonlights as the Deputy Chair of the AASB and does a very good job as part of that as well. I'll hand over to Stephen now. Thanks.
Thanks. Thanks, Keith. And thanks to the AASB for the opportunity. Well, it turned out to be a somewhat more significant opportunity than we first realised of taking on this project. This is a paper that we will have completed within the next week or so, and which we hope to see published fairly quickly. And it's a paper co-authored with one of my colleagues at UTS, Yaowen Chan, Mei-Ting Liu from Macquarie University, and Yan Chen, who is a PhD student actually at UTS and one of our very best PhD students. And if anybody's looking for an employee, Yan's going to be looking for a job next year. So please keep her in mind. Basically, the structure of this presentation is going to be very brief relative to the substance of the paper, but I briefly want to touch on three areas. The first one's just a little bit of background to the adoption of IFRS in Australia, looking back at what was being said before it happened is, I think, important in terms of how we then view the subsequent research, which is the main part of the paper. But I'm not going to spend a lot of time in this audience talking about a lot of the finer details on the academic evidence that exists on this point. I'll mainly focus on how we managed to, if you like, group the research and the way we review it. And then I'm just briefly going to highlight two major challenges that we see the problem, we don't know what the answer is, but they're major issues in terms of trying to systematically evaluate the benefit, if you like, or costs associated with a change in accounting standards. And then what I want to finish with, probably a little bit more controversially, and probably of more interest to our panel, I actually want to go back to where we started and look at some of the general concerns that people had with the mandatory adoption of IFRS, and then just line those concerns up, not so much against the empirical evidence that we have to date, but some of the current developments at the IASB and some of the developments in standard setting, and maybe flag one or two areas where I think some people might have some cause for concern. So firstly, just a little bit of background. There was a long-standing commitment to something called convergence or something called harmonization for a long time before it actually happened. You can go back to the AASB operating in quite a different structure and accountability system, putting out material that was basically flagging the merits of having convergence in accounting standards. But the actual process by which Australia became one of the early mandatory adopters of IFRS actually all happened pretty quickly. In fact, it's some commentators at the time pointed to the incongruity of the then reconstituted in 2000 Australian Accounting Standards Board putting out a policy statement on international convergence and harmonisation policy, which was actually ratified by the the Financial Reporting Council at the time. And then on the 28th of June in the same year, the Financial Reporting Council made the formal announcement that Australia would adopt IFRS from January 1, 2005. Of course, that prompted a lot of people to basically go, what the hell? You know, how did this all happen so quickly? There are a number of factors, I think, behind that we can identify. Obviously, one was there appeared to be quite strong political push for this to happen. But essentially what we did, we went from what was being discussed as a gradual process to something that was largely imposed as something of a big bang approach. And in terms of the official announcement of this, a key point that was made was Europe is going to do this in 2005, so we should follow Europe. Now, lots of things I personally like about Europe, pastries, wine, and so on. But I don't know that it was ever very clearly explained just exactly why we had to follow Europe. At the time, therefore, there was a lot of media discussion and debate about this. This is just a quote from one of the big four accounting firms, pointing out how multinational companies would make very significant gains if you didn't have subsidiaries accounting on different bases, and that's pretty obvious. But there were a lot of people arguing that in various vague ways, international standards may not be the best thing for Australia. Likewise, there were a number of academics who were making commentary on either the a possible decline in the quality of accounting. Australians were pretty proud of their accounting standards and their standard setting process. And in the paper, we do highlight a number of significant differences that existed between the then Australian GAAP and what IFRS required. One example was, controversial example of many, was derecognition of certain internally recognised intangible assets. The other area that there was a lot of debate about was the fact that Australia is fairly unique in that we have this imposed sector neutrality approach to accounting standards. So the assumption is that when you see a transaction, it doesn't matter whether the transaction is being conducted by, for example, a not-for-profit, an arm of government, or a for-profit corporation, that the accounting should be identical. And so as a result, there was a lot of concern that the public sector requirements would get lost in what is essentially solely a private sector accounting a set of private sector accounting standards. So we tried very hard in reading a lot of this material to go from the general things that I just mentioned to 5 identifiable claims that in their own way each reflect some balance of cost and benefit. And these were the 5 that we came up with. The first one is that comparability of financial reports would be improved and that this would reduce the cost of external financial analysis. The second one was that barriers to international capital flows would be reduced by reducing differences in financial reporting requirements. And an operationalized version of that is that the cost of capital would be reduced for Australian firms. The third one was that financial reporting costs specifically would be lowered for Australian multinational companies and for foreign companies operating in Australia. The fourth one was that there'd be more meaningful comparison of the financial performance and position of Australian and foreign public sector reporting entities. And the last one was that, and again, this will get to the problems with these objectives. The last one was a lot of people claiming that the quality of financial reporting in Australia would be improved because we would essentially be using best international practice. So very briefly, I'm not going to run through because of the time each of these points, But what we've done, or what we are doing in the paper, is to group the Australian evidence, because that's what we're specifically interested in, on each of those 5 points that I described. Where relevant, we also consider well-known analyses of this issue internationally. So in each of these cases, we generally find some evidence to support the existence of a benefit, or at a minimum, it's not that easy to find convincing evidence that suggests a net cost. So in each of these cases, this is what we find. What I'd point out as we go through these is that, for example, on removing barriers to international capital flows, it's actually quite difficult to find evidence on that point. And I'll get to a general problem in a moment that partly explains that. Same thing with trying to understand cost of capital effects. We've actually got somebody in the audience who, as an academic, has done probably more on trying to examine cost of capital effects than almost any other accounting researcher, in Christine Bottazan. And I think she'd vouch for just how difficult it really is to granularly identify these effects, incremental effects. On the third one, reducing reporting costs, again, very hard to find actual evidence on this. I mean, the reason, of course, is because the data is simply not available. How would I actually go out and measure reporting cost for a company that has operations outside Australia as well as in, granularly, to identify the effect of a change in the accounting standards? It's an easy thing to say, but it's a hard thing to do in this case, probably because we just can't access the data. The public sector, again, very hard to get data on costs and issues with public sector accounting, simply because the data is not easily available or readily observable. And then my favourite, improving financial reporting quality. This sort of leads into the next point I want to make. Now, what do we mean by financial reporting quality? Academics have spent a long time debating what this term means, let alone how we're going to measure it. So one way of thinking about this is demonstrating some form of correlation with price or change in price. And of course, there's a huge amount of accounting literature ever since Ball and Brown that basically does that. And there's a lot of Australian evidence on this point too. There are many other ways in which researchers have tried to proxy accounting quality, and there's a lot of debate about the potential bias that those measures create. But generally, the evidence that we see is consistent with what I'd call no harm. And maybe the fact that it's hard to demonstrate convincing evidence is attributable to the fact that, typically these are very noisy, debated proxies for how we think about accounting quality. So this gets me to two fundamental problems that we as academics face in giving standard setters and regulators a clear answer on the question, was this a good idea or a bad idea, even assuming that it is clearly one or the other. The first follows from what I was just talking about with the example of how do we test accounting quality effects. You've got to actually be able to operationalize what that effect is that you are trying to measure. Now, cost of capital is a notoriously difficult thing to try and measure accurately, let alone test influences on how the cost of capital might change. It's probably quite easy to capture what some people think of as value relevance. We look at the correlation with price or with returns. But a lot of other ways that people have suggested we might capture accounting quality are actually highly debated, and/or the data simply isn't available to us as researchers. So the first big problem that we have, if we set out to answer the question, was it beneficial that we adopted IFRS, is what we would call the proxy problem. That's what academics often call, the difficulty of measuring in a reliable, unbiased way the underlying construct. The other problem that maybe might be a little less obvious, particularly to non-academics, is what I'm going to call the causality versus correlation problem. So many of the studies that we reviewed, many of which I'd say were not published in the best journals, in various ways demonstrated some sort of correlation. But whether or not those papers demonstrated evidence that you would call causality, I think is somewhat more questionable. And there's a lot more recognition of this point now among accounting researchers. Researchers are quick to recognise, well, it's one thing to show that something's correlated, but it's another thing to actually convincingly show that A causes B. And so there's more and more recognition that, this is we think of the difficulty of having to control for other things, but sometimes people are so enthusiastic to control for things that actually induces a result. Researchers are trained in using appropriate econometric techniques. But there's a wonderful paper published in the Journal of Accounting and Economics by Chris Armstrong and others a couple of years ago, and it uses state-of-the-art econometric techniques to convincingly demonstrate an association between either workplace smoking laws or changes in state gun laws and corporate voluntary disclosure. And clearly that's nonsense. And in fact, the authors are quick to point out, they're not trying to claim causality. They're showing how sometimes, you can demonstrate association rigorously, but what you haven't identified is causality. So the problem here is, how confident can we be in a lot of the research that we currently have as demonstrating causal effects of a change in a set of accounting standards? Now, there are some other papers. Nemeth Shroff has a couple of interesting papers that look at the effect of changes in accounting standards in the US, and there are ways we can try and do that, but they're limited. So a key point is, it might be disappointing, but it's actually hard to convincingly demonstrate net benefits or costs from something as drastic as a switch from AGAP to IFRS. Now I want to go back to where we were at the start with some some of the concerns that people expressed are very hard to quantify down to a measurable outcome. Things like loss of standard setting sovereignty, for example, or loss of influence. There were some that argued that Australia would lose technical accounting standard setting capability. But I think if you look historically at the degree to which Australia has played an important role in the setting of accounting standards over the last 20 years since IFRS was adopted, I think that would be a pretty hard argument to maintain. But on the other hand, if we do have a policy of following what is developed by the International Accounting Standards Board, that raises the question, at what point do we find things that might not fit the Australian setting very well? So I just want to briefly mention two examples. One is the new IFRS 18, which most people think of as being about how income is presented. But sitting there also is a set of requirements dealing with what you have to do with what are called MPMs. Well, some people might think of non-GAAP reporting. And a key point in that a standard effective from 27 is that if you report an MPM outside the financial statements, and it is clearly an MPM by the way you highlight it and report it and use it, you actually have to also report it within the financial statements. Now that raises an interesting question. Why does disclosure outside the financial statements have to move in? One argument I've heard is that it improves transparency, and in many places there are concerns about non-GAAP reporting. But Australia has a relatively well-structured regulatory environment. There are rules about what a firm can say and what liability that creates. So is that a good idea for a setting like Australia? The other one that I'll mention, that some of those critics of adopting IFRS, if we got them in here today, those that are still with us, they might also look a bit critically at the exposure draft on business combinations, disclosures, goodwill and impairment. And that reflects a push by the IASB to require disclosure around what are termed strategic acquisitions that involves a very substantial amount of detail that is basically justifying business activity on the part of management and the board. Now, again, there are laws in place about disclosure of significant transactions. There are also procedures such as an annual general meeting, which is conducted under certain rules that contribute to the accountability of management and the board in this area. So I think in conclusion, when we look at the last 20 years, we could probably conclude that mandatory adoption of IFRS doesn't really seem to have done any harm. And there may actually be evidence of some benefits as well. But convincingly demonstrating that is a challenge because it's hard to measure the cost or benefit in the way proponents or critics were really talking about. And then it's also hard to demonstrate a convincing causal link between the effect and the standard. And the last point I'd make is that perhaps we're at a point right now where some of the concerns, the more general concerns about delegating the standard setting process to a degree to an international body, perhaps some of the recent shift in focusing around what might be issues, perhaps that is a concern in terms of whether it's a net benefit in the Australian environment specifically. So thanks for your attention.
Thanks very much, Stephen. I have to confess, maybe it's not a secret anymore. I'm one of the accounting nerds, and last time I was in one of the presentation of Stephen's was at the beginning of my PhD, and I was sitting at the back row, no idea what I'm listening to, but still wow. It's just getting better and better. And now I would like to introduce the chair for our final panel session today, the AASB board member, Paul Rogers. So Paul is an audit partner at KPMG with over 20 years experience in audit and accounting advisory field. So there's no, where are you? There's no one better than Paul to conclude the session for today. Thank you. Sorry. No.
Thanks, Al, and good afternoon, everybody. I was thinking on the way here, 20 years has gone pretty fast. And I was reflecting on what occurred 20 years ago. Facebook was created 20 years ago. And I was thinking through how much time I spent on each. I would say I'm probably more immersed in learning, reading, understanding IFRS than I spend on Facebook. So it really does have a big impact on life. It's also one of the drivers of why I'm here. So 2005-06, Australia needed accountants. There was a big flow of accountants here, and I changed the direction of my life by being volunteering to come to KPMG. So I'm really excited about the next session. We've got a great panel to come up. I think each of them have had the full 20 years experience and more. Really looking forward to engaging with reflections on that topic. So I'd like you to welcome to the stage a few of my esteemed panelists. So the first one's Stephen, who's already here. I don't need to introduce you, Stephen. Congratulations on a great presentation. The second one is Jay Park. So Jay is a board member of the Career Accounting Standards Board. He's also in his spare time the Chief Accounting Officer at Samsung Life Insurance based in Seoul. He's done more than 20 years of IFRS accounting experience, and he's been involved in the IFRS 17 transition and a range of other activities. So welcome, Jay. The second person is Ram Subramaniam. So a lot of people in this room would know Ram. He's a stable person within Australia. He's part of the CPA Australia team, has various leadership roles over his tenure, including at the moment he's the interim head of policy and advocacy. He's also had international experience before moving to Australia in the UK, been involved in the ICAW and a range of other activities. I'd like to also introduce Melissa Sim. So Melissa's a partner at EY. She's a financial reporting specialist and IFRS specialist. She's been involved at EY for a number of years, but prior to that was at Deloitte, including some years in Paris at their IFRS Centre of Excellence. So I think Antarka's coming to join as well. I don't need to introduce Anne. Obviously, everyone knows Anne and has had spent some time, so I would like to welcome Anne as well to get an IASB perspective on the session today. Okay, so this session is going to run a bit differently. We are taking the opportunity because we have Jay here from Korea, who will do a separate presentation to us on his reflections on the career effect of IFRS and how that experience has gone. So I'll hand over to Jay for his presentation first, and then we'll jump into Q&A. No.
Good afternoon, everyone. I'm Jung-hyuk Park, serving on the board of the Korean Accounting Standard Board. I really enjoyed today's presentation on 20 years of IFRS in Australia. I'm not a professor, but a preparer, so I'm gonna provide my own view based on my hands-on experience for insurance company. Well, Korea actually adopted IFRS in full back in 2011, which was 6 years after Australia. So whenever the IASB issues new standards, it will take effect in Korea right away without any changes. Before my presentation, I would like to say in advance that there is this view is entirely my personal view, not that of the Korean Accounting Standard Board. And even among my colleagues, there are those who have different views from me. Okay, let's get it started. This slide shows Korea's roadmap and the progress towards IFRS. I remember that Korea had concerns similar to Australia's before adopting IFRS, especially worrying that the standards might not fit our own circumstances. But with a strong government leadership, Korea announced in 2007 that it would apply IFRS fully by 2011, and we started preparing step by step. I'd say Korea's experience with the IFRS adoption stands in two main ways. First, Korea adopted IFRS through a Big Bang approach, meaning a simultaneous transition rather than phasing it gradually and going with convergence method. All listed companies and financial institutions in Korea were required to apply IFRS all at once. Not only did they have to apply IFRS for consolidated financial statements, but they also had to apply it to separate financial statements as well. Second, Korea adopted IFRS, which is principle-based accounting, even though Korea traditionally followed a rule-based accounting under its court law framework. This shift required significant changes, not just in the accounting practices, but also in the regulatory regime and related fields like corporate tax calculations. Before adopting IFRS, Korea's accounting standards, which was our local GAAP, were largely based on US GAAP, which, like IFRS, is internationally recognized. So we initially thought that the transition would be relatively smooth. But as we got deeper into it, we encountered three major issues. First, as I mentioned earlier, Korea made a unique choice to apply IFRS, not just for consolidated financial statements, but to separate financial statements and regulatory reporting, even regulatory reporting. This decision has created conflicts, especially since separate financial statements serves as the basis for tax calculations and dividends payments in Korea. Replacing local GAAP completely, even for separate financial statements, has led to ongoing challenges for regulators, users, and preparers alike. This issue isn't necessarily with the IFRS itself, but more with Korean government's decision to fully abandon local GAAP when IFRS was adopted. Personally, I think that we might have been better off keeping local GAAP like European countries did. Second, another big challenge has been fair value measurement, especially when there are no active markets to refer to. This has been particularly tough for the insurance industry since IFRS 17 was introduced. IFRS 17 provides broad guidelines for actuarial assumptions in calculating insurance liabilities, but it leaves a lot of room for interpretation. First and last objectives, it seems that Australian researchers have found that IFRS adoption has improved the comparability of financial statement to some extent. However, in Korea, there is concern that the principle-based nature of IFRS gives management too much freedom, leading to different interpretations of the same transaction. Many feel that this actually reduces comparability here. I think it's gotten even worse since IFRS 17 came into effect. Personally, I believe that principle-based accounting and comparability are inherent, hard to reconcile. Considering that IFRS is used in more than 112 countries, it's understandable the IASB can't provide detailed guidance for every specific situations. To achieve globally harmonized accounting standards, I think some degree of comparability might need to be sacrificed. The second objective was the main reason why Korea also decided not to phase in or converge IFRS gradually to remove barriers to international cash flows. For the third objective, it's also similar in Korea, where large companies like Samsung Life, where I work, adopted IFRS early to avoid the cost of double bookkeeping. That wraps up a quick overview of 5 objectives from Australia's experience and how they applied in Korea. Thank you very much.
Thank you, Jay. Great to get the context of Korea, understand your journey, which obviously came a little bit after ours, but really good context, particularly the 17 stuff. So what we might do is we might start with just the international aspect still and just continue with that vein. So I'm going to ask the panel just about Australia's IFRS journey compared to other jurisdictions. We've got a number of people that have worked overseas and seen it in practice over there. So maybe I'll start with you, Melissa, and just think about, how did it work here compared to overseas? What are the differences that you foresaw?
I think when we adopted in 2005, as was said earlier, we weren't the only sort of jurisdiction. We had Europe adopting at the same time. And I think to get the benefits of IFRS adoption, a big bang approach, they spent a lot of time working on IFRS 1 and getting that right. If you had gone a gradual approach, the question would have still been, well, at what point can you say I'm IFRS compliant? Because I've never actually adopted IFRS 1. And as we have seen in Australia with the move from special purpose to general purpose and to RDR and SDS over the last number of years, AASB 1 didn't go away. We actually had to keep reapplying it, which created challenges and opportunities. I think by doing that big bang, for many that overcame that constant change and constant potential problems.
Okay, thanks. And just thinking about your globe-trotting role with the IASB, have you heard anything about Australia's experience different to the locations? Obviously, you do get a good read of different jurisdictions in the role you've got.
I think Australia embraced IFRS really, really well.
Yeah.
There are some countries that found it difficult to embrace IFRS, and we touched a little bit on that with Korea. Countries coming from different accounting traditions. We are also bound by our education and our culture. Some people are great at stepping out of that, others less so. So Australia did embrace IFRS principle-based standards, building on, as Stephen said, a very excellent set of standards pre-existing in Australia, continuing that type of approach, principle-based. And I think just Australia just got on with it. Stephen talked about a little bit of the history, and at the time, the dominant voices were the stock market, wanting to grow the capital market. The dominant voices were the large international companies. BHP did not want to do 8 gaps, it only wanted to do 1 or 2. So there were a lot of entities in Australia for whom they couldn't see the benefits because they went from one set of standards to another, but they were somewhat similar and they could use. And then the education system embraced it enormously and created a whole profession of people, of which we're part of, who became very globally mobile. So mobile within companies, mobile within the audit profession. So I think Australia embraced it, and it was easier, if you will, than in certain other jurisdictions. And that's still the case now, that there will be countries in Asia looking to adopt, and it's a very big step for them.
Thank you. And thinking about that benefits and costs, and obviously Stephen's presentation went into a lot of those things, but and the evidence around those. Maybe thinking about the CPA and the people that work in that business, and also the students out there. What do you think there? Is it a benefit for them? What do you see as the benefits from your perspective, Ram?
Stephen touched on a number of excellent points that he'd looked at as part of his research. And I'll just pick up on one thing that Anne just said around mobility. And I call it transferability, but it's the same thing. Having worked in the profession with a professional body for over 18 years, I found a benefit from IFRS adoption in Australia because I came here back in 2011 and slotted in pretty much straight away into CPA Australia and hit the ground running. So there was no issue in that sense. So that's a personal experience. But if I look at it from a professional body's perspective, one of our cornerstone programs is the financial reporting program, which is entirely based on IFRS accounting standards. And we deliver that same program in multiple countries around the world. And we have that ability to provide that education in financial reporting based on a solid framework that everyone around the world can apply. So it's that transferability, that mobility that we really see as a big benefit in adopting IFRS. And I know the question here is about Australia, but even though we are an Australian-based professional body, we have multiple offices around the world and members who are working across the world. So for us, IFRS accounting standards is a very important aspect of how we grow the brand across the world.
Thank you. Thanks. So we might move on to another section, which is about technology and how technology plays a part in standard setting and the impacts of that. So just thinking about the availability of advanced systems and technology and how that's implemented the application of IFRS and whether that's made compliance easier given the complexities or whether that's just a work in progress. Maybe Stephen, if you've got a view on systems and how that interfaces.
I think there's 2 points there, I think.
Yeah.
One is that it's again hard to find convincing ways of understanding how changes to the external reporting regime actually influence the decisions managers and boards make, because we know that there's a strong degree of alignment between internal accounting and external reporting, but we don't really know the degree to which, for example, something like moving from the old AGAP to IFRS actually changed internal decision making. So that's probably part of your technology thing.
Yep.
The other technology topic I'd throw in there is that as various countries around the world have long since moved or are moving actively towards electronic reporting in various ways, the degree to which there's an accepted set of international standards obviously increases the likelihood that we could do that as well, although that's probably a regulator initiative, not a firm level initiative.
Yeah. Any of the views on technology and digital reporting?
Yeah, I can share some views from our perspective. CPA Australia has been a strong supporter of digital reporting for many, many years now. We actually published a research report back in 2020, looking at the adoption of digital reporting across the G20. And Australia was an exception in mandating digital reporting. I recall Treasury publishing a paper on it back in 2012, but nothing's happened since, except, of course, ASIC accepts digital reports voluntarily, although I don't believe anyone has done that so far here, lodged a voluntary digital report. So mandating digital reporting seems to be a good thing, especially for transparency and better consumption of the information. And whilst many countries across the G20 have adopted digital reporting, Australia seems to be reluctant. So that's probably a question for the government and the Treasury people here to consider going forward.
Hey, I think Anne wanted to comment first. and then
I do.
Jay.
And I want to pose you the question of why countries want to stay on IFRS, why they want to come on, and many have come on, but why would they want to stay on? Because it's not an easy journey necessarily. And I think it's driven by the investors. I think it's driven by global capital markets. They are not going to become unglobal anytime soon. The technology that emerged around the 1980s that enabled the markets to grow like they have and operate 24/7, that's where the driving force behind the idea of trying to use one set of accounting standards. And there is global support. We spent a long time working with our colleagues at FASB, keeping standards aligned, keeping the principles that underpin the standards as close as we can have them. There are some differences, but largely people, what we hear from investors is that keep the standards. What they want to deal with one set of accounting standards as far as possible. So that's been driven by the capital markets, and the capital markets, as we all know, are voracious users of information. And a lot of that is digital trading. It's already, we love our financial reports, and we talk about the note disclosures and analyzing. Today, we've been analyzing in detail note disclosures, but many, many investors are not doing that. They are operating electronically. They are operating with digital financial reporting and making their decisions at that level. So digital is the way ahead, and we need to all go there. The research that the IASB has done has shown that more than 90% of the capital markets, the value in capital markets, are using some form of digital in some way. So, it's here. It's here, and we're also facing all the other technologies that are part of this. But we already know there's extensive use of digital reporting, and we think that will grow, and it makes sense that it will. So that's all part of still needing structured accounting standards that investors can understand. And so the call for investors is, please make the accounting standards one set as close as possible.
Okay. And Jay, your perspectives?
Okay, technology-wise, it's not my area of my expertise, but I was actually asked by Antaka to share what Korean government has been doing regarding the adoption of XBRL submission. Actually, in Korea, the Financial Supervisory Service is leading the way in XBRL adoption, and we started, providing financial statements with XBRL files in 2011 when we started IFRS. But for disclosure, for note disclosures, we just started providing footnotes in XBRL form starting in 2023. I was told that providing footnote was really much more difficult than providing financial statement. That's why it took some time and took a lot of efforts to do so. So now, I'm so happy what the phase that Korea is doing. That's all.
Very good. Okay, so moving on to sustainability in IFRS, which is obviously a hot topic. We've heard a bit about that today in a broader context, and just thinking about the interaction between IFRS and sustainability standards, and just views on how that's going to affect Australian entities going forward, and maybe your take on that, Ram, would be useful.
We heard earlier from another panel on nature, and that's obviously one aspect of sustainability. We've heard over the last 2 days at the IASB conference about the connectivity between financial reporting and sustainability reporting. And I know I'm very conscious that the IASB and the ISSB are looking at that particular topic of connectivity. On this point, I'd probably just mention that CP Australia has also published a research report this year called The Horizons of Financial Reporting, and looking at it from an investor perspective. And that research identified that climate and the impacts of climate in financial reporting is something that needs to be addressed by standard setters. And I'm conscious that the IASB has got a project that looks is looking just at that topic. But the question is not just about what sits within financial reporting. And we heard this morning about the role that the conceptual framework plays, and we know that the conceptual framework sets certain boundaries as to what is included in financial reports. And when we start thinking about things like intangibles, which a lot of them are in that sustainability space, financial reporting starts to get challenges, especially around recognition and measurement. And perhaps that's where the role of sustainability reporting comes in, where the connection between what's in financial reports and what's in sustainability reports, as long as they're aligned and connected, work together as a complete set of information. So to me, I think there is something definitely there in the way ahead for the standard setters.
Yeah, so Mel, maybe just from a practitioner's perspective and what the perspective may be, what do you think some of the challenges might be?
Look, I think one of the big challenges is the landscape in Australia. It's not IFRS, but we have all the corporates apply the accounting standards, yes, disclosures to differing degrees, and we have this phased implementation with sustainability. I think my probably, and it's very, very personal concern, is that sustainability, yes, we have phase in, and it's going to, not everyone gets it immediately, but for smallest corporates, it is going to be a massive project. We're all learning what that means, and to some extent we are living it because we are actually trying to understand it. For the smaller corporates, the information they need and the knowledge they need to do that, I think, is going to be lacking in the short term. I think the sort of dichotomy on that is the larger corporates need the smaller corporates to prepare the information for them to themselves report. So I think that is going to be a big challenge. We have 2 tiers of reporting for IFRS, and I know the board sort of considered it. It hasn't gone there yet, but I do wonder whether that is somewhere that needs to be considered.
Yeah, okay. And maybe, Anne, just your thoughts on that, in terms of where we say we're going first, right, in terms of IASB S2 equivalent. What are your thoughts on that?
I think that each country is looking at this issue because globally it's of such concern. We've noted today that Australia is ahead on this. So Australia is once again ahead on things. And that reflects the confidence that people have in the capacity of Australian, the professionals, the supporting structure that exists, and the people to actually do it. I think it's such a great vote of confidence stepping out. And given that we know investors are exceedingly keen to see this information, they're already using some forms of sustainability information to make their investment decisions. So companies that are wanting to attract capital at the most attractive rates are going to be ahead and providing that information. In fact, they already are, but this will lead to more standardized information. I take Melissa's point about the concerns for smaller entities. And it does mirror how it went with IFRS in 2005 and in other, as we've observed in other countries as standards come in, insurance being a case in point where the larger companies and countries could bring it in and other countries have had to slow their adoption because of the resource constraints. So I think the tiered approach in Australia is positive. And, I think Australia's made a good stand in saying that largely what Australia will adopt as mandatory standards is based on S1 and S2, and the idea of the global baseline and build on that. Each country will add as they wish, but a global baseline should have the effect of improving the disclosures that companies provide.
Okay, so we've been a good adopter, but we've not adopted everything. We've got a good question here. So around 15 years ago, Australia decided not to adopt IFRS for SMEs, a simplified set of standards for smaller businesses. Do you think that the recently released Tier 3 should be available for SMEs? I'll start with you, Melissa.
The release Tier 3, the IFRS 19. I struggle with having IFRS 19 and 1060. I think the purpose of them is very similar. And so to justify differences between the two, I think is going to be a problem. I personally agree with not having IFRS for SMEs. I think that will just confuse the landscape in having one company doing something, accounting for it one way and one doing it the other. But I think the underlying principles of both of them were very similar. To justify differences between the two is actually going to be difficult.
Yeah, okay. All right, so I think we're just going to do the final question, and I really want to pose a question to each of you, just to add, in the 20 years as a period of time, reflecting on it, has it been a success or not, and why? And maybe we'll start with you, Stephen.
Yeah, I think it has. I think personally, I think most of the reasons that were offered at the time, and basically that Anne reiterated, I think are reasonable expectations, even though it can be very difficult to document in an academically rigorous way evidence that actually shows us that is true. But at the same time, I do think some of the issues people raised back when this was first decided about the ability to control standard setting, I think the sustainability reporting is an example of that. To the best of my knowledge, there is no formal policy that says we must follow what the IASB produces. But, one of the challenges, of course, is understanding what conceptual framework, thinking back to where we started this morning with Christine's presentation, what the objective of the IASB's standards actually is. And maybe if there's an implicit follow the leader approach that reflects what we do more formally with the product of the IASB, maybe that will cause, some concern or debate in Australia. So I think, and the general direction, somebody asked a question earlier this morning, when do we stop making accounting standards? Well, obviously business continues to innovate, transactions are developed that weren't thought of before, and so we need standards. But, I think it is an issue to the degree that the approach might broaden more towards a transparency and disclosure perspective, that I think that's then cutting across the role of a whole range of mechanisms, including regulators, enforcement, the role of institutional shareholders and so on. And I think that's a challenge for us to think about in the future.
Anne, hopefully you say yes.
Well, I was an academic and a national standards setter before I went to the IASB, and like Stephen, I was very familiar with the large body of research, and Stephen did a great job in saying yes, it's largely positive, but there, when we look at it, we have to understand the difficulty of research to capture what we want to know. But on balance, let's say that the research is capturing a big picture. But what I see by going to the IASB and the time I've spent there is, I just think it's an enormous achievement. There's so many areas in the world where people haven't been able to work together on something, and this working together. And this room's got a whole mix of people in it. The working together bit is so fantastic. Now, there are national interests and there's national preferences and there is pushback, but I think that's actually quite healthy, because that really improves the process. And in the end, people have to trust in the technical ability of that nominated board, and put up good people to be new members of that board. because that board will make the decisions as the technical experts of what is the best, because we could all have different ways of doing things. It's accounting, we make judgments, and by arriving at a consensus, I think we have shared practices of accounting. I think it's really beneficial.
Excellent. Melissa.
I think we've finally got there. I think there were some hiccups at the beginning, not adopting IFRS completely and to sort of the letter caused issue initially when we eliminated some options and then had to reintroduce them later on. That did, from a globalization point of view, cause confusion. So I think now the consistency, which impacts mobility, training, comparability, I think they are really showing through. I don't think we've got there yet, but I don't think that's necessarily an Australian thing. And the IASB, I know, are trying to get there, but people's history and where we come from and our old standards are still influencing the interpretation of IFRS. So there are gaps in standards, so I don't think we're over yet. And I think that is going to be a gradual process to eliminate some of those.
Right.
I think I've already said yes, but I'll probably qualify that a bit with there are local gap considerations and there are challenges around the local gap space, especially in the not-for-profit sector. And I know the AASB has just published its exposure draft looking at a proposed new tier 3 standard for the not-for-profit sector, which is fantastic. Haven't looked at it yet, but I'm sure it'll be great. And of course, Stephen's already highlighted some of the public sector challenges. So there are challenges. The AASB has done a great job in retrofitting IFRS to apply to the public sector. So I think overall the answer is yes, but there are some issues and challenges that need to be addressed from a local gap perspective.
Yeah, Jay.
Yeah, okay, time is running out. And looking back in 2011, I think the first objective that Korean government said was to deal with what is referred to as Korean discount. But I think right now, as of today, I think we've solved that kind of issues, and I think we've met the objectives that we set at the beginning. So I'm pretty happy with that.
Yeah,
that's my resume.
Great. Okay. Yeah, I think for me, finally, I think we've tested this pretty hard. If I think about the GFC, I think about COVID, it stood up pretty well. We found some things out, but it stood up pretty well. And so I think about the economic cycles it's had to go through. It's actually been pretty good. It could have been a lot worse if it wasn't done properly in the first place. So for me, that's quite a good indicator. I agree there's more to go. We'll look forward to working on that both at the AASB and with the IASB as well. But I will conclude in thanking all of my panelists today. Really appreciate your insights and attendance in the session today. And thank you all for attending. I'll hand back to Keith, who I think is going to do the closing remarks.
Thank you, Paul, and thank you to our panellists from that last session and all our panellists and presenters from today. That does bring us to a close with the Research Forum for 2024. Now, a few things before I do release you for drinks outside, so I promise I won't take too long. But just reiterating a few things. I'm aware that there are quite a number, pleasingly, there are quite a number of first-time attendees at this event. I hope we can see you again, if not in person, online. So the Research Forum is held about this time every year. So please look out for the registration possibilities and consider subscribing to the AASB's newsletter so that you'll be able to get notifications when these things come up. A couple of other research-related matters which may be of interest to a lot of you in the room. We currently have a tender process going at the moment where some projects, we have interest in projects related to our technical work program. This is following on from the process that we had a little bit earlier this year where we received quite a number of tenders to support our technical work program. So for those of you that might be looking to do work that would be useful for the AASB, that's certainly a first port of call, something that's current. Also, under a watch this space approach, we intend later this month to make another call for tenders for research projects, this time a bit more broadly focused, not necessarily connected to our current work program. The way I'd like to position this is maybe it will influence our future work programs. So that's certainly something to keep in mind. Also, one of the things that we instituted this year is we have a visiting scholars program now. Millicent Chen finished the first stint as a visiting scholar at the AASB, at least with the current incarnation of this, not so long ago. And we're looking forward to getting some new visiting scholars next year. So those of you that might have a sabbatical on the horizon coming up and wanting a place to come, keep the AASB in mind, get in touch with us. Being a relatively new program, we're quite flexible with how we can slice and dice this. And of course, finally, there's our SSRN working paper series, which for those of you with some working papers that you might want to start getting out there, getting a bit of publicity for, and certainly getting it on the radar for the AASB so that, especially if it's relevant to our work program, we can certainly take that into account. I want to emphasise too, this is not just for local researchers. I know there are quite a number of international researchers in the audience here, so please feel free to be a part of that. We'd certainly love to hear from you. So I also want to, on a final note, I particularly want to thank University of Technology Sydney for co-hosting this event today. We can't do this without our university partners, and we're very grateful for the support that the universities provide with AASB. And also, I think we should acknowledge our Lee, who stepped in at the last moment and has been a wonderful compere today. So thanks very much, Al. So on that note, I think we should wrap up for this year. Thank you once again for everyone attending, and drinks will be served outside. So please feel free. See you next year.